Morning, everybody. Simon Dixon here. Hopefully, everything is good, and you will be viewing this from either Twitter, YouTube, or Facebook. Today, I'm going to talk about India because India is a ultra interesting economy. One that I personally invested in the crypto scene for the reasons that I'll give you in this video. But they've introduced a series of very bad policies, and another one came yesterday when a government panel recommended, it doesn't mean it's going to happen, but a government panel recommended an outright ban on all non-sovereign cryptocurrencies. So today what I'd like to do is go through India, because I didn't cover it in my last videos when I gave a trip around the world and who's likely to get caught in the financial crisis in the worst way and what their policies are like to be. If you are interested in that, please check out other videos on my YouTube channel. Just search Simon Dixon. And I've been going live recently each and every day covering different topics. One of those videos was a trip around the world, different countries, policies, and how they're going to react to the next financial crisis and this upcoming systemic risk event I'm forecasting. So India, there was a few reasons why I was really interested in India and its policies on cryptocurrencies. Firstly, it's the second largest population in the world, over 1 billion people, only behind China. And it's predominantly a cash economy, which is why it's led to some of the policies and changes that the government's introducing, because in a cash economy, it's hard to collect tax than if you put everyone through the banking system. And therefore, government's always incentivized in order to try and find new ways of getting tax collecting. And in India, they had a problem with not being able to collect tax efficiently. Also, gold is, India is the largest consumers of gold in the world. People understand the value of gold. People in India are skeptical about banking, cash. It's kind of in the West and other countries, we've just accepted that it's okay not to own your own money, and that you should trust a bank and you should put all your wealth in a bank and trust the bank to look after that. But in India, they're still skeptical about banking. They believe that the concepts, you can imagine banks' original pitches when they first started. They said, I've got a good idea. Why don't you give me all your cash? I'll look after it for you. I promise that I'll look after it. I promise that, and once you give it to me, I'll be able to spend it, rehypothecate. At some point, we were not skeptical about that proposition from banks when they originally started, but India still is. They truly understand the value of gold and sound money and a store of value that exists outside of something that the government created and their currency. And also, it's a really large population of freelancers that work for foreign companies. And so many people just work independently. They need to get paid in the Indian rupee, but they're often working for a company that might only have a US dollar bank account or a pound bank account or a euro bank account or a renminbi bank account or whatever. And so they've become, India have become hugely dependent upon services like PayPal in order to try and facilitate that. But there's huge transactional issues and costs around the international banking system, which really made cryptocurrency just perfect in so many ways for the demographic and the people of India. It's also a nation of people, from my experience, that stand up to government. So if they don't like policies, there's riots in the streets. The people don't put up with things that they don't think are right for their nation. So I do expect some kickback from some of these policies. But at the end of the day, this is all about tax collection and control. And there's probably better ways in which they could do this, but I'll share with you some of the things that India have done and why I think that's going to lead to them going down in the next financial crisis in a harder way than they would if they didn't have some of these policies. So essentially, India is following and moving and transitioning towards the Western model of banking. The first thing that they did is they exercised a war on cash. And the war on cash was by making some of the first step was by making some of the largest, I believe it was 2,000 rupee notes, and made them illegal and just took them out of the supply, which was a crazy event in India. Essentially, people who had their life savings in larger denominated cash notes had to queue outside a bank and risk getting, their life savings stolen while crime massively increased at this time, when people had to stand outside banks with bags of cash and their life savings in order to put it into the banking system. This then gives the banks the ability to own the Indian people's money who once owned their own money. So cash is money that you can own, but when you put it into a bank, the bank becomes then the legal owner of the people's money. And at that point, they can spend it as they wish, they can rehypothecate it, and they can transition the economy to an economy dependent upon debt rather than savings. And so once you wash everybody's money through the banking system, you outsource the creation of a digital currency to the private banking sector. And that digital currency is a digital representation of the Indian rupee that the government creates. So if you watch my video yesterday, I talked about 6 different forms of money. So the Indian Central Bank, I believe it's called the Reserve Bank of India, correct me if I'm wrong, would receive seigniorage income from the creation of that cash. And so that money is added to tax revenues because it's hugely profitable printing notes, because the cost of printing a note versus the value of that note when you sell it to a bank to put into an ATM is often, almost close to 99% margin. I think about 97% or something, depending on the country. And that is a profit-making activity for the Indian Central Bank that can then transfer that to Treasury and reduce the amount of tax liability. They are giving up that income, and they're now handing over and outsourcing the creation of a digital representation of the government's currency, a digital version of the renminbi. Sorry, I'm getting myself confused, Indian rupee. And they're giving that to the private banking sector, which means that now that digital currency is backed by debt, and they have to follow the Western cycle of, in order to stimulate economic growth, you have to increase the money supply, which means that you then have to get individuals deeper into debt by stimulating a rampant debt capital markets, or using debt products through the private banking system. And you have to stimulate corporate debt. And eventually, when the system goes wrong, because that creates inherent systemic risk, because you're turning your fiat currency into a Ponzi scheme, whereby there's not enough money to pay down the debt, you then have to recycle that debt during systemic risk events into the government. And then the government's debt goes up and up and up and up and up, as it has in UK, America, and many other Western economies. So essentially, they chose to take a war on cash, get people to put their life savings and stand outside banks so that they could then create a digital version of the renminbi, but operated by the private banking sector. And I suspect that they're going to do that with more notes and eventually make cash illegal at some point, so that they can wash everything through the banking system and move towards the Western model. So essentially, that's what they're choosing. So that was one of their first policies. Their second policies was to defensively look at how to defend against any competition in the currency markets. So one of those was to initially, I personally invested in several companies in India in the cryptocurrency space. And the first move was to ban banks from banking exchanges or cryptocurrency companies. So once they lost their banking services, they could no longer exchange the Indian rupee into cryptocurrencies or Bitcoin through an exchange. And therefore, it created a rampant peer-to-peer market and cash market where people were exchanging cash for cryptocurrencies because, as we, for all the reasons that we talked about, that as a freelancer working in India for a foreign company, a cryptocurrency is a very convenient, cheap, fast way of getting paid. It is also an alternative, more potentially higher yielding store of value than gold. I'll cover that in probably tomorrow's video about this concept of a store of value versus a speculative store of value, and why Bitcoin is a speculative store of value, which creates the opportunity for higher returns than if you were using gold as a store of value. That will be a topic of my next video. Essentially all those reasons why cryptocurrency is so perfect for the Indian population and so good for them. So they did the bank ban, meaning that it drove people into the peer-to-peer market. And the news yesterday is that they want to place a ban on all non-sovereign cryptocurrencies. My personal belief about the reason why they're doing that is because when Facebook's Libra first came out, or first was announced, they stated that they wanted to integrate it with WhatsApp, which is a very popular app in India, and also Facebook is ultra high adoption in India. So Facebook launching their own cryptocurrency probably scared the hell out of the Indian government. And they recognized that that a private organization like Facebook could end up becoming a really important currency. And then quite rightly, that would end up giving all the Indian nations data, not only for their social networking, not only for their communication through WhatsApp, but also their financial transactions to a US enterprise. And therefore, this is probably something that they want to fight back against defensively. The bit that they're missing is the importance of Bitcoin in this whole part of the equation. Bitcoin produces an exit from what I forecast will be an over-intrusive data collecting cryptocurrency like Facebook's crypto. And it also creates an exit event, which is probably what they're trying to prevent, which is not in the interest of the people, in my perspective, during the fact that they are about to enter into the systemic risk cycle of the global financial crisis. India was on track to be a really superpower economy. Their stock market was doing well. They were building an equity-based system around a nation and population that really value savings, and a large portion of them were storing their wealth in gold and cash, which means that they're immutable to the systemic risk events of the banking system. Now they've tried to reverse all those policies, and now that they're moving into a banking Ponzi scheme, they're switching their savings cash-based currency of the Indian rupee to a debt-based digital currency created by the private banking sector. And they're highly likely to launch their own digital version of the Indian rupee by the central bank when the banking system collapses and they enter the systemic risk event. And then they're going to have to switch all of those balances that they got people to take their cash, deposit it at the bank, and now they've got a digital representation, debt-based version of the currency. Then that will lead to systemic risk in the next global financial crisis, which will then lead to all of those people losing their bank deposits. And so rather than have people rioting out on the streets, I believe that the Indian central bank will create their own digital wallet, and they will issue a digital currency which represents the same value of all the money lost in the banking system. They let the banks go bust. The central bank replaces their money so that the consumers don't lose money. But then you switch to exactly what they wanted, which is automated tax collection at the central bank digital currency, complete control of the money, and the ability to switch people's finances off when they don't like how they're acting or how they're spending their money or how they're doing things. And so, Bitcoin is a very important counterforce to keep regulators and keep central banks more honest when people can have an exit. But they're proposing an outright ban on the use of all cryptocurrencies. And so really, they are going down a very unfavorable path that I think will lead to a lot of political problems for India in the future during the next global financial crisis, when they could have been a savings-based gold saving nation that used cryptocurrency to suck up international trade for their people. And really become a superpower economy. So I believe it's a very sad day. History will tell us where we go from here. I don't think that these policies matter too much, because I do think that they're going to have to react based upon black swan events and the inevitable, predictable, and guaranteed collapse of the fiat-based Ponzi scheme. And they're going to have to implement changes in policies and reforms in policies as a result. But just, a sad day for the people of India if this goes through. And I would encourage everybody in India to look at these policies and question where things are going and what the future of that economy is if they continue down this path of following the Western debt-based Ponzi scheme for their fiat currencies. So that's going to do it today. In the next live stream, I think I'm going to cover the concept of the difference between a speculative store of value and a store of value, and how that relates to gold and Bitcoin, unless there's some other major breaking news that comes out that changes that. So I'm going to get back to work supporting companies building the future of finance. Please do like this video, share this video. If you're on YouTube, head over to the channel, click the subscribe button. There's a little bell symbol. Click that bell symbol on YouTube, and YouTube will notify you every single time I go live. Or I'll try and go live on my Facebook page, Simon Dixon, and my Twitter @SimonDixonTwit. Yeah, that's going to do it. And I'll see you tomorrow or the next day.